Hello fellow traders everywhere, Adam Hewison here, co-founder of MarketClub with your midday market update for Tuesday the 11th of October. Don't forget, tomorrow we have our show, MarketClub TV. It's a 1-hour show. We have a private phone line. You can call in, leave a question for us, or you have a question about an indicator or market, whatever it might be, how you like the show, how you don't like the show, any suggestions. Give us a call, 410-867-2100, extension 129. And they'll leave a recorded message, and we'll do our very best to get you on the air tomorrow at 5. So, hey, give us a call. So let's go take a look at what's going on here. Slovakia, Slovakia, Slovakia is the chant right now. It would appear that this little country in Europe holds the key to either economic disaster or economic enslavement. The entire country of Slovakia has a population of a little over 4 million people and a workforce of maybe 2 million people. These 2 million people are now being asked to shoulder the debt burden of $5 billion as their share of the European Recovery Program. You know, that just doesn't seem fair to me. This tiny country has a better GDP growth rate than the United States. It also has a population that is 99% literate. And lastly, I heard this morning, that their tax rate is 19% for individuals and 19% for corporations. That's a flat tax. And the country is thriving. Maybe we can all learn something from this little country and how it's run. Okay, now let's go to the markets that we track and follow every day, and with our trade trial technology. So I'm going to go to my portfolio, which is so easy to do with MarketClub, and I just click here. And here are the 6 markets we track every day. Now, a couple of other things I wanted to share with you today. I'm going to show you our scan model, which is really cool. These are recent trade triangles. This is the last, I just searched today for recent trade triangles, and this is what came up. Temple Inland, I'm not sure who that is, but they're up. That's a new high, 500,000 shares traded already. Let's take a quick look at that one. I haven't looked at this. We just brought this up, so let's go click here. And we're going to look at the chart and see where we had a monthly trade triangle come in. And let's see what, it's telling me it's not in my portfolio now. If I want to add it, it's just a very simple way to do things with MarketClub. I think it's very, very intuitive, and I think you'll agree when you see it. So here we are. Okay, so big move up today, 31.58. That's exactly where it's trading. Obviously, it doesn't have a lot of volume, it looked like. So let's go back even further. Let's go to the max on this, and let's see. Okay, so it's been as high, wow, it's been as high as way up here in the 37 range, 38 range. And so certainly has some movement, but it's looked like it's acting very, very well. So there's the signal right there, 31.58. And as I say, it's got some, look at where we caught the move down here, 34.62 to here, 30.15. So it's definitely worth looking at. But what I want to share with you is just how we use our triangles. You can search for equities, foreign exchange, futures, indexes, and so forth. And you can search for not just the monthly trade triangles, which are very important, of course, but also the daily, weekly, and the scores, plus 100, minus 100, whatever you want to go. And it's all available to you to show you exactly how you can use this very cool technology to find trades that others will be missing. So that's one of the things I wanted to point out to you today. So that's just one of the aspects, one of the many aspects of MarketClub. But let's go to the markets as we track them every day. And we go to our portfolio manager. The first market we're going to be looking at is the S&P 500. And we have a plus 55 or minus 55 in this case. And what we've been saying all along is this rally that has been really kind of gleamed off the European challenges, but it really hasn't gone. It's stopping, or I should say, it looks like it's stopping right around these levels. And that is just here, here, here. And you can see it's really kind of just, so we should be getting the lows somewhere around here. So this market, we do expect it to turn back down and possibly challenge these lows. But if you go further out, and let's just clear this up and go down to our other indicators that we watch very carefully, because we have a minus 55 rather. And what that means is that right now it's in a trading range. And this is the great thing about MarketClub. It tells you when a trend is well established or whether it's just a trading range. And I just take this little off there. And let's just go further down in this chart. And we can do that very simply by scrolling down here. And you can see the market's very heavily overbought, just like it was here. and to a lesser extent right here. So again, we were coming from a very oversold condition, and we've relieved that problem, and now we're very, very overbought. Now what's going to happen? Well, obviously yesterday was Columbus Day, very light day in trading. I think that's what pushed the markets up. A lot of short covering from some of the big, heavily shorted stocks, like Citi, for example, which continued today. But I think that's probably for the most part over with, and it's going to be how we close out the week. Now, if we see this market sort of roll over again, if we just put my telestrator on again, if we roll over again like this, and hold on just one second, let me take this off. And I'm going to go to the trend line here, take that off. Actually put it on and take this off here, and then take that off. Okay, so if we go to see this market begin to roll over, in the next day or two, it's going to be very, very important. We may do a little more work, but I think eventually we're going to turn over. Now you see this very tight line now. It's called a doji. Now every time you've had dojis in the past, like here, here, and certainly there to a certain extent, and even on the bottoms, it kind of tells you there's maybe a potential reverse. It tells you there's an equilibrium between the buyers and the sellers. I mean, look at this, a great example, pretty close to the top of a doji, and that's on the daily charts. Now you can get them also on the weekly charts. A little more difficult to find on weekly charts, but certainly this is certainly something you want to pay attention to. Again, we're going to look at our trade triangles, which are negative on the monthly and on the weekly, and nothing has changed, even though you've had a pretty dramatic rally from the lows. And certainly if we put our weeklies, so our dailies in, you can see from 1146, which is around somewhere right around here, right around here, that would have been an area to possibly be a short-term, very short-term buy. And we don't recommend that, quite frankly, because you're much better off playing and trading with the major trends, which are obviously the monthlies and the weeklies. So let's clear the screen, go to our next market. And the next market we're going to be looking at is kind of a market that's done nothing. And I keep talking about these markets when they sort of say, well, why do we keep talking about it? Because eventually it will do something, and that's why we want to be prepared to catch the move when it happens. And we're, of course, looking at spot silver. This is a live chart. It's real-time prices, and you can see just looking at this chart, and this is a great thing about visualization, is really you can really just draw a very simple line here, and it just says it's gone nowhere. So since we made the lows here, right, this day right here, this market's just really gone nowhere. Just you can capture everything within those ranges. So I think it's going to do a little more work, but I think potentially with our major trade triangles on the downside, the monthly and the weekly, still negative, I think the potential is the market may actually break again to the downside, and we are looking for the potential to go to $20 an ounce on silver. Now, if it doesn't go there, don't call me and say, Adam, you said it's going to go there. I'm not telling you that. What I'm saying to you right now is the potential is there. If you look back historically, that's where silver has gone. And if we go into a downturn in the economy, which we don't know yet, but certainly the trade triangles are suggesting that, then there's a very good chance that silver will be looked upon as an industrial metal and not as a precious metal. It has this yin-yang, Jekyll-Hyde kind of personality where sometimes people say, oh, it's a precious metal, sometimes it's not so precious. So look at it that way. I think it's more of an industrial metal, unlike gold, which is obviously has a different feel and texture to it. So let's just clear this off the screen, go to our next market, which is gold, and we'll take a look and see how that is shaping up. And here it is. It looks almost identical. The only difference here is two things. And that is, one, we've got our trade triangles. Unlike silver, the monthly is positive right here. You can see it right here. It's positive. The daily is also positive, but the weekly is negative right now. So it's a trading range, 55. So you want to be using the Williams percent R and our Donchian trade channel. So what I'm going to do right now is take this off the screen and put our Donchian trade channels in here, which we've used many times. It's a very, very cool tool to look at. We use the default settings, so it's nothing fancy and nothing you can't do. So you go on chart studies right here, Donchian trade channels, boom. You see how quickly it just puts it in? And now we're back up to the midpoint in this trade channels. And I'm going to also put something else on there, which is a Williams, the parabolic. It's developed by Wells Wilder. It's called the parabolic, and you can see how that works. these little dot, 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 and you can see it sort of turned around there, but we're in the midpoint here, and what we said before with the Donchian trade channels, once the market gets outside of the channel, like here and here, it tends to come back in, just like we got outside here, and you may have to wait for a while, but it does come back in. So I think what we're seeing right now, we're in the midpoint. I think it's the best thing to do if you're not in gold right now, if you're not holding physical gold or whatever it might be, is just watch the market. There's nothing to say you should be in this market right now unless you're a long-term trader. Now, if you're a long-term trader and you buy here, what's your risk? Well, your risk is going to be if the market goes below 1550. So you've got a $110 risk right now in this market, which is about 8 or 9%, which is, if you want to take that risk, that's fine. But that's what I'm saying to you. I'd rather wait until this market turns around, starts going up. As many of you know, we've been talking about the Q3 as being the high in gold. It turned out to be exactly where the high came in on in terms of this double top. And I think it's going to take a little more work to get this energy field built to even challenge it from those levels. So let's go to our next market. And our next market is going to be the crude oil market. This is an interesting market because this has been mimicking the indices, the S&P 500, or the equity markets, I should say, and it would look as though when the equity markets are down, then this market is also down. And so here we are, negative on the monthly, negative on the weekly, and only the daily is positive. So you've got the longer-term trend pointing down, intermediate and longer-term trend pointing down. So you've had a nice rally from the lows. We're at an area now, I think, getting close to this Donchian channel. So I think here, depending on where we close, I think the next day or two could be an excellent place to really get short this market and look for a move down to possibly the 80, 78, somewhere like that, those levels. I think you could draw a line here around 78 to 80. That would be a target zone I would think you could see here. But again, one thing I want to just mention to you today, we moved to the December contract, okay? We were following the November contract. We've now moved forward to the December contract, so please make a note of that when you're watching these videos. So again, 55 trading range. You're probably, if we go, take everything off the screen, go to our Williams percent R, which I'm sure is probably overbought. Yep, very overbought, just like we were here and back here. And I think probably the next big swing is going to be probably at least a pullback to the minus 50, which I think will pull it back to the 80 level. So let's see how that plays out. Where we close for the week is going to be very, very important. We said yesterday the next 24 to 48 hours are very, very crucial in this market, how it's going to go. I don't think we're going to go much higher than we are right now. And if you simply look at this on a line chart, and that's the beauty of MarketClub, you can just move to a line chart. You can see basically, if you just simply, I'll put a trend line in here, and you just simply draw a trend line. You can see we're right here. And the other thing I want to share with you, this is something really, I haven't shown this before, but I want to show it to you now. So give me a second and we'll get this set up for you. So let's just clear this off the screen. And what we're going to be talking about is Fibonacci clusters. And I'm going to clear the Donchian trade channels off. I want to make it as simple as possible so it's very easy to understand. So here we are. And first of all, let's take a look at our tool, and that's the Fibonacci tool right here. So if we go from here down to here, you can see we had a retracement here at 85.29, let's call that 85.20, and then the other one is 86.42. Now if we go further down to the lows we had right here, you can see we have a Fibonacci 85.55, which is very close to the 85.29 level. So that's a cluster. When you get two measurements in the Fibonacci range that measure very close to the same, it's called a cluster, and it's usually when markets turn around. And I've never shown this to anybody on this video for sure. So take a look at this market very carefully, because tomorrow and later this week we could see this market reversing back down to test the lows we set around 80. And again, if we put our line charts on, you can see we're a little bit higher for the day, but I think that could maybe even come off there for a while. But certainly tomorrow and Thursday and Friday are going to be very key for this market. So let's go to our next market. And the next market we're looking at is the dollar index. Again, we have a situation there where we have, let me just put this back out, and take this off and go to 3 months. You see how quickly it is easy to do. So if we look at this, you can see we had a big down day yesterday, of course, when people thought everything was hunky-dory in Europe. It's not, and it will not be right for a long time. But we had the little kind of chucha here, what I call a chucha, and then you have this. Hold on, I've got to take this off. 1 second, sorry. So let me just put my telestrator back on. But you can see quite quickly, you know, here's a doji, and you can see the market made a low that I think will probably trade around here and have another. We may take several days, but it looks like the dollar is the only game in town. Obviously, this is an area around the 79 level, which is going to be a little problem on the upside. We were looking for it to go to 80, as you may recall. We got very close, but we created a doji line, which is right here, and that created the top. Again, these are things to watch very carefully, these doji lines, as they do make changes that do pertain to changes in the market. So let's close this up, go to our next market. We've been taking a little longer than expected today. We always enjoy doing this for you guys. So let's just take, and ladies too, and let's clear this off the screen and go to our next market. And the next market we're looking at is the CRB index. And that, again, is we've got all of our indicators here. They're all negative, and I think that's the thing to look at longer term. And so we have the monthly and the weekly negative. Only the daily is positive, which doesn't have a lot of appeal. But you've seen, you've had the pullback. You've had a little recovery. I think we potentially could roll over here between 312 and 316 in the 316 level. And I want to just show you what this is. Actually, I'm going to draw that with a free hand, because last time I did that, I didn't do a very good job. So let me just do it with our tool for drawing trend lines. So let's just do that. So I'm going to go to my trend line tool right here and simply just draw this across, and you can see right around the 316 level. And then if you look at the last one, I think it's right around these levels here, where we should be running into resistance, that red zone. I think that'll be a tough area for this market to get through. I'd be very surprised if we see this market move over that level. So this is Adam Hewison for Market Club. Thanks for stopping by. Don't forget to watch the show tomorrow night at 5 o'clock. Call us at the number. Here's the number again. Call us at Market Club. And phone number 410-867-2100, extension 129. And please tune in tomorrow. I think you'll enjoy it. We've got some interesting things coming up, some interesting opportunities. And I should really just clear the screen up, because it'll make it look a lot nicer. So again, give us a call, 410-867-2100, extension 129. Leave a message for us, and we'll get it on the show tomorrow night. So Adam Hewison for Market Club. Every success in the market. Stay well.